Is China lying about its economic stats? Is the GDP growth is real?
Let's find out in this video.
Well, China has been known to manipulate data in the past to present a rosier picture of its economic growth. On the other hand, some argue that China's economic data is largely accurate and reflective of its impressive economic development in recent years. One of the main concerns regarding China's economic data is the reliability of its GDP figures. In recent years, China has consistently reported GDP growth rates of around 6 to 7%, which many experts view as unlikely given the country's economic challenges. For example, China has been grappling with high levels of debt, slowing productivity growth, and an aging population, all of which could potentially drag down its GDP growth. Some analysts argue that China's GDP figures are artificially inflated by factors such as stimulus spending and government subsidies, and that the true growth rate is likely lower than what is being reported. Another area of concern is China's trade data. China is the world's largest exporter, and its trade surplus with the United States has been a source of tension between the two countries. However, some experts have raised questions about the accuracy of China's trade data, suggesting that the country may be overstating its exports to avoid tariffs and other trade restrictions. There have also been allegations that China's trade data is manipulated to support its foreign policy goals, such as by inflating trade figures with friendly countries or downplaying trade with countries that it has disputes with. Despite these concerns, there are also reasons to believe that China's economic data is largely accurate. For one, China's statistical agency, the National Bureau of Statistics, has taken steps in recent years to improve the quality and transparency of its economic data. The agency has implemented new statistical methods and increased the frequency of data releases, which has helped to reduce the potential for manipulation. Additionally, many independent analysts and organizations, such as the World Bank and the International Monetary Fund, have conducted their own assessments of China's economic data and generally find it to be credible. Furthermore, it's important to note that China's economic growth in recent years has been undeniably impressive. Since opening up to the world in the late 1970s, China has undergone a period of rapid industrialization and urbanization, lifting hundreds of millions of people out of poverty and becoming a major global economic power. While some have raised questions about the sustainability of China's growth model and its long-term economic prospects, it's hard to dispute the fact that the country has made significant strides in recent decades. In conclusion, the question of whether China lies about its economic statistics is a complex and contentious one. While there are certainly reasons to be skeptical of some of China's economic data, such as its GDP figures and trade data, there are also indications that the country's statistical agency has made efforts to improve the accuracy and transparency of its data. Ultimately, the true picture of China's economy is likely somewhere in between the extremes of complete accuracy and total fabrication. As China continues to play an increasingly important role in the global economy, it will be important for policymakers and analysts to carefully scrutinize its economic data and to continue to seek out independent assessments of its economic performance. Has China's economic growth been overstated? Express your views in comments. For more videos and insightful analysis, subscribe to our channel.